Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on commodities, there's been a whole lot of trading opportunity. We're going to talk a lot about gold, silver, and miners, but we're also going to cover the dollar, which is relevant, and oil and natural gas as well. But certainly want to talk about bull miners, bear miners, senior miners, junior miners. Let's start it off with the dollar. So the dollar is in an area on the daily time frame where the burden of proof for me is on the bulls. I need to see the bulls break this lower high pattern, 98.37, 98.28, 97.77. We just keep setting these little daily lower highs, and we're in a little bit of a tightening range. If the bulls can show up and break 97.44 and 97.59, that will be a notable bull break for me. And from there, we'll say, all right, our monthly higher low has been established, and the monthly uptrend is remaining intact. And then from there, we're going to be looking back up at the recent high, which is the highest price that we've seen in essentially 2 years, 2+ years. So that's a key resistance level. The FOMC and its monetary policy is going to be a week from this coming Wednesday. So that gives us about, 8 trading days? 7.5 trading days until we see a significant fundamental reason for a reaction in both the dollar, gold, silver, and these miners. So it's going to be interesting to see how everybody positions themselves heading into July 30th, I believe is the day. July 31st. So as far as I'm concerned, this coming week, we're watching those lower highs of resistances. And if the bears break 96.67, we're looking back down at the recent low. And that is a key level in the short term that the bulls need to hold. 95.84 and 95.03 are the most important supports. After a significant bull move to start July off, question is, can the bulls, after consolidating, keep that up? So gold has had a major breakout. Let's talk about gold and silver and the comparison. And we're going to talk a lot about comparisons in this video because you can compare gold against silver and you can compare senior miners against junior miners and see who is holding up the best. So if we're going to compare gold versus silver, we're going to do XAU, XAG, and that's going to show us the chart, the price of gold versus the price of silver. And we can see that in this chart, over the last few days, there has been a very notable shift that has gone on. So how do we interpret this chart? Let's look at the weekly chart. So in the weekly time frame, pretty much all of 2019, gold has been gaining on silver. Silver has been lagging behind, and gold has been gaining value as far as, if we have 1 unit, 1 ounce of gold compared to 1 ounce of silver and the price, 1 ounce of gold has been worth more and more all 2019, except for this last week. This last week was a big shift and a big pivot, and it's really just silver playing catch up really quickly. So you can see this one candlestick, 1 week of action, took out the last 7-8 weeks of steady climb that the gold bulls were gaining on silver. So this now has our attention. So if we look at the longer term perspective on the monthly chart, we're still in an uptrend for gold. Gold gaining on silver has been in an uptrend for 2 years at this point, and it's not likely that it's going to break anytime soon. This is monthly consolidation after a 5-month bull break, and we're going to look for a monthly higher low compared to 81.55. This is something to be keeping an eye on. Whether you're determining, should I be playing gold or should I be playing silver, this is the chart that you want to be looking at. Likewise, if you're determining whether you want to be playing junior miners or senior miners, we're going to do the same kind of comparison. So here's gold by itself. Gold on the daily time frame saw its bull break, and then we consolidated on Friday. And the key level from here is 1400. Have to hold 1400 to keep the daily uptrend intact. And I will exit my NUGT position that I've been in for pretty much 3 weeks at this point. I will exit that position when gold loses its daily uptrend. So 1400 is the key support for me in this coming week. And if the bulls can hold that level and try and see continuation, we'll look to continue the uptrend. We also want to keep in mind that this weekly chart is not the ideal confirmation of the bull flag. We got the break, but there's an upper wick there. So again, if we were to pull back and lose some daily support, some more prolonged weekly consolidation may be underway. Focus shifted, and I wouldn't be surprised if traders were taking their gold profits and putting them into silver to be the laggard. So if we're just comparing, let's see, gold. We're currently at the price for gold. When's the last time we were at this price? And we're looking back at May 2013. For silver, when's the last time we were at this price? We were here June of 2018. So 6 years, 6-year highs for gold versus 1-year highs for silver. If you're of the viewpoint that this silver laggard move is going to continue, there's a lot of catching up to do. That being said, this chart of XAU, XAG has dumped, meaning I would expect at least a short-term oversold bounce where gold is going to gain back on silver at least a little bit to establish a daily lower high. So going to be very interesting to watch this going forward and see how much of a laggard is silver going to be playing this catch-up. So for silver, we can see the daily time frame just exploded, and this is a much more convincing continuation move from this consolidation than gold had. Again, just to compare, gold's continuation move after trading sideways for weeks, one green day really was the breakout, whereas silver, after trading sideways for a few weeks, that breakout was 3 days and a lot bigger percentage-wise. Bearish reversal candlestick on the daily with a volume climax indicating a temporary top has potential. So if we lose the 4-hour uptrend, we're going to look for daily consolidation to be underway. Still in a 4-hour uptrend as we head into next week, but if we fail to break the top of 1659 and then drop down and lose the 4-hour uptrend, we'll then zoom out to the daily chart and look for silver to form a daily higher low. And with the size of the move that we have here and the amount of space the bulls have, there's a lot of space where we can form that daily higher low and still remain in the uptrend. Gold has much less space to work with before we lose the daily uptrend. So a bit of a different scenario with where we stand. Keep in mind, for this XAU, XAG chart, it doesn't only mean both going up. So let me just explain what I mean there. If gold and silver are both going down and gold starts going down faster than silver, this chart is going to continue dropping, meaning silver is gaining on gold, but it's happening on a pullback. So it doesn't mean that one's going up faster than the other. It can also mean that one is going down faster than the other. So just keep that in mind as well. So the miners now, is it better to be a senior miner or a junior miner? For the most part, in the last couple years, senior miners have easily had the edge on playing against the junior miners. That has changed this last week. So here's GDX. First off, the miners are doing way better than the precious metals themselves. Look at this weekly bull flag confirmation on the senior miners. Extremely convincing. And again, you just compare that to gold, and it's not nearly, let's go to the weekly for that comparison, not nearly as convincing. A lot of that has to do with the strength of the S&P 500 and the recent all-time highs. But GDX bulls are in full control. The daily uptrend, I would say that anything above 2572 keeps the uptrend intact and keeps the bulls in full control. The reason I'm going to exit based on gold rather than based on what the miners is doing is because, number one, I want to lock in gains and not give this profit back. But number two, I think that's going to be an early signal for the bull miners potentially losing some momentum. So with all this bull miner hype that we've seen, we can also be keeping an eye out for weakness in precious metals and look to the bear miners. The bear miners, whether we're looking at Dust or JDST, they're getting crushed. If we're looking at the weekly time frame, it's been a lot of red weeks in a row. And I'm certainly not looking to fight this trend right now, but if gold loses the daily uptrend and we start to see some cracks in the bull momentum, at least short term, there's going to be some short-term trade opportunities in the opposing direction. So going to keep an eye out that as well. And there have been so many times the last couple of weeks where as a day trader, if I'm saying, well, what do I feel like trading today? What's a good setup? It's in gold. And Friday was no different. Friday gave us 4-hour consolidation on gold, and we saw a little bit of a bounce first thing in the morning. Great opportunity right after the bell rang. That opportunity was very short-lived, but it was a solid 3% plus in those miners. So I'm going to consistently be looking at bull and bear miners for volatility and trading opportunity until things cool down, and there's no sign of that. This could last another couple of months for this trading opportunity. So looking at the junior miners played catch up in a big way. Keeping in mind that these are not only gold miners, and while they're referred to as gold miners in a lot of these, the names of them, if you really look into the details, there are silver miners mixed in here as well. So just be aware of that, and perhaps the uptick in silver is the reason that the junior miners who have more exposure to silver are performing better comparative to the senior miners this past week. So a big bull breakout, tightening range, little double top. Let's look at these miners real quick before we compare them. So the senior miners, little double top, same as the junior miners. If this inside bar breaks bearish on Monday, we look to pull back and form a daily high or low to keep the uptrend intact, because the bulls have a lot of space to work with, just like silver bulls have a lot of space to work with. So let's now get the comparison. This is a chart with GDX compared to GDXJ, and you just put that backslash in there, and it shows you one versus the other. So if we are in a monthly uptrend, this is the monthly chart, this shows me that GDX is stronger than GDXJ because it's in a monthly uptrend. Looking at the weekly chart, a very slow and steady climb over the last few months, where it has absolutely been better to be a bull in the senior miners than in the junior miners. That changed this last week, and you can see it changed significantly and very fast. So the big spike up in silver is attributing to the big spike up in the junior miners, which is attributing to the big spike down in the chart that is comparing the senior miners to the junior miners. I hope I'm not confusing people. Watch this video a couple times if you need to, but having these charts that show the comparison can really help us determine, and we do this, I learned this from cryptocurrency. Should I be trading Ethereum or Bitcoin or Litecoin? Which coin is stronger? Well, look at the chart that's comparing one to the other and use those trends. That tells us which one is stronger. So the monthly uptrend on this chart is going to be very important, because if that is lost, that tells us it's no longer a sure thing that the senior miners are stronger than the junior miners' bigger picture. So that's all the talk we got for gold and miners. Feel free to comment, ask questions, certainly a hot topic, and we will continue covering forever. Oil is in its tightening pattern. This is the monthly time frame. We're watching the equilibrium. We've got our high, low, lower high, higher low, and it looks like our lower high is being set at 60.91. And I can say that by looking at the shorter term time frames and zooming into the details. So we can watch this pattern on the weekly chart and say, all right, it's up to the bulls to form a weekly higher low compared to 50.59 sometime in the next week or two. Just like these miners let us know, I was able to put out a video 7 months ago saying, it was an introduction to gold and miners video in anticipation of the 2-year equilibrium on the monthly time frame that we were waiting to break. I was not saying it's going to be a bull break or a bear break, but I was saying a break is coming, and that means volatility and trading opportunity is coming. Well, now I'm saying the same thing for oil heading into the fall. Whether it's August or September, we're going to be looking for a break of this long, drawn-out pattern that has been not nearly as long-term in the making, but it's about a year in the making, 10 or 11 months, and we're going to look for a break of this. And when that break happens, there's going to be significant opportunity, whether it's for the bulls or the bears. I'm not sure yet, but I'm going to wait and look for that break and then play that volatility. So we're going to look for a higher low compared to 50.59, and ideally, I'd like to see this chart get as tight as possible, because that's when the breaks get the most follow-through. I'd like to see a higher low form, and then end of July into August, maybe a lower high, and then a break mid-August from a real tight range would be ideal as far as what I feel would give us the best amount of follow-through. So the leveraged ETFs for oil will be a hot trading item this fall, in my opinion, when we get a break of this pattern. It's just your standard significant volatility, new price range discovery, equilibrium, tightening range breaks, volatility returns, volume returns, all that good stuff. Natural gas bears still in control. We're heading back down to support of 215. It's the only support level nearby. The weekly lower high is clearly set at 250. And if we drop down and break 215, the bears continue their stranglehold on natural gas. If the bulls can hold that level, change the daily trend, which is there's no sign of the daily trend changing. Pretty much, if we're going to change this daily trend, it's going to take a week plus to develop. We'll have to bounce, set a lower high, then a higher low, and a higher high if the bulls are going to have a chance of changing this weekly trend. But as of right now, it doesn't look too good for the bulls. They have to show up this week and try and create some space to change that daily trend to look for the potential of a weekly trend change. But I personally am not holding my breath for the bulls to try and change this long-term trend. And We'll see how that continues to play out. Right now, I'm least interested in natural gas. I am most interested in miners, and will be most interested in oil. It'd be nice timing to see the hype fade from precious metals and miners into the fall, and then hype head over to oil with volatility. So I appreciate you watching. Lots out there in the commodity space, and if you've been watching these videos, you know for months I was saying I'm not interested in commodities because there's more opportunity and more volatile sectors out there. We're watching these longer term patterns. When these longer term patterns break, I will be interested in commodities. And it's also, being a trader, it's so important to know when to go aggressive and when to trade actively and when to pump the brakes and look elsewhere. So I've been looking elsewhere for so long, but I personally have traded these miners more in the last 2-3 weeks than I had in the last entire year before it. So strike when that tight range breaks, and that's when the volatility and the opportunity is there. Have a good rest of your weekend. We'll see you next time. So no video to wrap it up today, so I'll tell a couple stories from just observations around the pond. The first is involving the frogs. So the frogs that you've heard at the end of these videos are all the little ones, the little peepers. And the ones out back in the pond, or out front in the pond, are much different sounding. And rather than being the high chirp, it's more of a brr, brr, brr. And so I haven't been able to observe them because anytime you get close, they just jump into the water or they're easily disrupted. So I sat back about 50, 100 feet and was just hanging out in the grass and watched these two frogs where it was the middle of the daytime, but one of them was sitting on his lily pad, a smaller guy, and a big guy came up out of the water and they started yelling at each other with their big throats going at it. And the big one just would slowly approach the little one that was sitting on the lily pads. And then they got to a point and they went up like that and met stomach to stomach like two big sumo wrestlers. And they interlocked their arms and did these 3 big barrel rolls splashing all around. Then they disappeared under the water. And then the bigger of the frogs rose up to the top. I assume the other one swam away, and that was now his spot. So after observing, that's what they're yelling about. Now every time I hear them, pretty much all night, they're just establishing their territory and their own little nook of the pond to each other. So I can't stop from hearing now, this is my spot, stay away. And that's now the image I have of the frogs. Another observation about the language of the ducks, I'm starting to learn what their calls mean. After hanging out with the chickens for a long time, you get to know what all their calls mean. And for the ducks, it's the same thing. So now I know food please, where's mom, danger, all these different calls that they make. They have a good morning call as well. I guess that's similar to the where's food call. But mom goes and she'll leave them every now and again and fly away. And there's a bunch of ponds within a 300-yard radius. And so she'll go and check out and scout out the other areas. And they don't always stay in my yard. They go to the pond in a different yard and they'll disappear for a day or two before they come back. And so it's almost, I become a duck babysitter because they'll be out and exposed in the open eating food when mom's not around. And normally mom is, when they're eating, she lets them get all the food and she's just watching. And you can see her tilt her head up whenever there's a shadow or something that flies, she's looking up for the hawk. And so when they don't have that protection, they don't know it. They're still obliviously just wandering around. So mom will leave and I'll hang out with them when they're up in the open. And this morning when I open the door, I usually open the door in the morning and yell something out to the ducks and they come running up the lawn and I give them some food. But this morning they didn't do that, and as soon as I opened the door, they gave the danger call, and so I knew something was up. I didn't know what it was, but as I started to walk towards the pond, the hawk was perched right in the tree above them as they were in the water, and they were almost being held captive in the water because they couldn't go anywhere or the hawk would come after them. So chased the hawk off, he flew away, and then what the mom does is when she comes back, she can't really fly in at an angle and skim on the pond because it's surrounded by trees. So she literally just dive bombs and she'll yell really loud. She'll honk that she's coming in, and then watching the babies and the mom reunite every time and all their happy chirping is a very fun thing. So those are observations in the world of nature. And we'll do a bed update. Hopefully next time we update the beds on Monday, they'll be a lot further along. Gonna go move some manure. See y'all next time.